Hello YouTube! Today the stock market and crypto and the Nasdaq are all going risk on. We can see that the S&P is now closed over the downtrend. It also stopped going down. We closed over the 50 DMA, and this looks like the beginning of a potential bull run. Keyword there being potential. So what do we have today? Well, we got S&P up 2.7, QQQ up 3, Russell up nearly 4. We've got ARK up 4. We've got almost every major ETF up more than 1%, up as much as 4. Everything is green. We look at the heat map, it's green. And what's really interesting is that after earnings, I believe the only company that reported a loss so far this week was Bank of America. So everyone else is winning. And we would note that by looking at the heat map today. We can zoom out to the 1 week and note that, okay, it's getting a little bit more mixed, but if we look out at the last month, as we have been attempting to carve out a bottom, it is almost all green now. Energy is still red. Select product manufacturers are still red. Process industries are a little bit red, but the theme here is bright green. It is really green. And as we look over here to the S&P now, that is what I was trying my best to explain when we were going through and talking about the last roughly 30 days. Starting on June 17th to where we are now, we know we got another green close. And today's price action can be largely explained by what happened to the Nasdaq. So even though the S&P claimed its 50 DMA today, the reason why it only backtested to the closing price, the high from July 15th, which was Friday, was because of the Nasdaq. So when we look over here at QQQ, what we just noticed that, it already did that work yesterday, opened over the 50, flushed, form a higher low, and another higher low today, opening back on the 50 and then closing at the high. So the question is the quality of this rally good? Are we seeing breadth and depth, not just in stocks, but are we seeing it in crypto and other asset classes? So again, another green bar and more volume than yesterday. For me, that is another bullish day. They weren't even able to get it down into the close. And I want to look at one more thing, then we'll look at Netflix, just because it's the first of the trillion-dollar companies to report, and we have to be aware that there's going to be more of these ones coming out. This is also likely going to be the only video until at least Saturday, so aiming for it to be a little bit longer so you get some more value. So if you're enjoying that, please smash a thumbs up. So we're going to look at Netflix now, and we can note that Netflix right now is up. It's up 5% on the day. It's up 8% on the week. So it's looking a lot better than it was before. And this is just because it's coming off a very, very low base. So we've dropped almost over 3/4 from the all-time high. And that is a lot. So what were the numbers? They were a little bit less shit, right? They're still bad. They still lost nearly 1,000 subscribers, but that's after warning of a $2 million subscriber lost last quarter. So what does this mean? Not so bad is the new good. That's the new crush. And we note that because the stock has been so depressed. So for it to go up 5% in the cash market, 8% after hours, it's not really a lot big of a deal, to be honest. Then we look over to another asset class like Bitcoin, which is what? Also getting over its 50 DMA. It's over it right now at 23,100. We also note that it is now over its 200 weekly moving average. So it is over its long-term price on a weekly time frame, and it is currently over its short-term price on the daily, with volume building up. What is that? That's bullish momentum. It's classic bullish momentum. And Ethereum is even up even more, right? It's digesting its move today like it did its 50 DMA before. But Netflix numbers are really just that the future is probably more bleak than it needs to be. And part of the reason why the market went up today is because I personally believe it's because of this. B of A survey shows full investor capitulation ahead of mid pessimism. So global growth optimism at all-time low, fund manager survey. So it's even worse than it was during the financial crisis. Investors slashed their exposure to risk assets to levels not seen even during the global financial crisis and assigned a full capitulation amid a dire economic outlook, according to Bank of America. So this is really interesting to me because, again, we note that when we look at the chart, I think that the quality of the last roughly month of buying is pretty good because we're depressed. We've been down, and capitulation just means that people kind of gave up. And ironically, I actually have the perfect tweet because I actually sent this out over the weekend. And here is what I put in. It perfectly describes what I want to talk about here. So let's look at the caption first. BTC Bitcoin heading to 25,000 if we can reclaim the 200 weekly moving average, then looking for relief that may turn into more. This is how a capitulation bounce, which right now, again, we look here, we're at capitulation. I'm getting 100% out of the market. I can't afford to lose more. We look over here at the BTC chart, and we note that we got that massive M. We're coming off of our base, and we're trying to curl. And this was at 21,000, so 21,300. We can now look back over here at BTC. Let's go to our correct chart. Let's go to the correct screen. Let's bring it over here. There we go. We're doing magic. There we go, 1 week. And if we bring that chart up now, oops, I don't have the right one. But anyways, I think it might be on this board. Let me just double check. So let's go to this one here. Let's go to BTC, USD. Let's go to 1 week. I think it's this one here. Here we go. So let's remove that pesky VWAP too. VWAP, gone. When I look at this, for me, this is really bullish. Again, I'm seeing capitulation for the entire SP 500. We've talked about that psychology chart before, but I just want to focus more on crypto right now because there's a crypto summit happening hosted by Bloomberg, and Mike Novogratz is calling for 500K again. So I don't know, right? Are we going to go to the moon another couple thousand% from here? I don't know, but I think that we're pretty depressed, and I think it's time for us to at least get some relief. So at the point where we're now above the 50 DMA, the 200 weekly, what I'm looking for is for us to curl back up and retest this 25,000 relative low. That is going to be the low that I have the red arrow to. It's right here. So if this is going to turn into more, as the tweet says, what should happen? Again, this is a it's relief rally over the 50 daily, 200 weekly. If it's going to turn into more, we need to get back above 25K. Because on the psychology chart here, it shows that we hook, we roughly test 25K, and then we drift down into oblivion once again. This is the part where we start getting tripped, trapped, and confused, where we ultimately do put in slightly lower lows, but we really start doing the consolidation or sideways pattern here. So I don't often focus on Bitcoin. I do like trading it. I prefer Ethereum. Drop me a comment and let me know what you think. But again, I would say that crypto is probably the riskiest asset. So when it's able to go up 12% on the week, for me, it is forecasting or previewing what's going to happen to the equity market. If they can't move a roughly $2 trillion market, which is crypto, how are they going to move a market worth 10 times more, or equities? And I know a lot of people have been talking about yield curve inversion in terms of that being a recession signal, and that's correct. But it does not mean it is imminent, does not mean it is going to happen right away. What it means is that sometimes up to even 12 months, we might get that. So now if I look over to my SP 500 psychology chart, let me pull that one up here because I know I have it. I tweet a little bit. If you want to follow me, I'll leave a link to that in the description. I've talked about some of my tweets before. Looking specifically for the S&P one here. So again, there's a story being told here a little bit. Here we go. So for the S&P, I believe that if we were to go back up here again, we go back up. This is a monthly candle, so we're looking for 1 month for every candle. Yeah, if the inverted yield curve is predicting a recession, yeah, that might come like next year. Where over here we're like, oh my God, it's actually a recession. Yep. And right, we know people talk about the St. Louis Fed revised again to negative 1.6. But again, remember that the classical definition of a recession is not just 2 negative quarters of contraction. We have to have it written off by the Bureau. The Bureau has to confirm. And with a strong labor market, I don't think that we are currently there. So we look at this here again. We need to get above 25K. We're already up 12% on the week. If we can repeat what happened here, either this week or next week, we're above 25K. We start to invalidate that bearish pattern. On the flip side here for S&P, in terms of where we are on our psychology chart, it's a little bit higher time frame. It's a monthly chart, and for me, this is looking a lot more constructive. Back above the pink line at roughly 405 means that we now have the potential to snap all the way back to the red line, and the red line is where? At 454. So if we're going risk on and you still don't believe it, I literally do not know what else it's going to take. Yes, we're not out of the woods. Yes, we got more earnings. Yes, we got CPI. But blah, 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 fucking blah, right? There's always something to worry about, which is why we call it a wall of worry. And if you look to the fear and greed indicator, yesterday when we closed red and this ticked up to 30, that is a very strong signal for me. People who were still in the market are no longer scared. Why? They flushed out. We literally have, right, the lowest exposure going back to before 2008, right? That's 22 years. At what point is it enough selling where everyone's looking one way? Oh my God, recession's coming. So yeah, we're going to talk ourselves into it. And no one's prepared for the other side. So again, trying to make this video a little bit longer, but not extremely long. So in about 10 minutes, that is my story for where we need to go from here. I'm not just looking at S&P, I'm looking at a few different things. But if we understand the quality of the daily chart, meaning again, now we have 15 out of 21 days, which have closed higher than we opened. That's 70%. When 7 out of 10 days we close higher than we opened, and the volume is also green, that tells me that, hey, other people see what I see. Whether or not there is a consensus, I don't really care. Why? Retail's always last to the party, so by definition, if you're watching this video, you're part of retail. So am I. Some are smart, some are not, but even money managers are capitulated. So if people who manage money are capitulated, I'm guessing that the retail investor is too. It was very difficult to convince people we were at a top at 480, but now that we're down here with 370s as our low, it's very hard to convince people we could go higher, which is why I don't think we've seen the squeeze yet. The daily chart just shows that we've built up pressure and we're over the short-term price. We stopped going down. And in after hours right now, we're battling for our last high here at 393.16. Then we can enter the gap here where, again, we can battle inside of here and then we go higher. We still have earnings coming out, including Tesla tomorrow, which I won't have a video for. So again, I don't know what the consensus is going to be. But all these companies have already reported, and only Bank of America missed. Everyone else is beat, right? Oh my God, the dollar's strong. We're going to have FX write-offs, whatever, right? There's always something to worry about. That's why we call it a wall of worry. At a certain point, people stop worrying and start getting greedy, like I am. And where we could go is roughly 454. That is a lot higher. And if now we understand that the daily chart is pretty much giving us the all clear, but it's still relatively a low time frame for what we want to do. For me, I have 380.5 is a very strong support, fundamentally, psychologically, everything. So if we were to go back to 454, from here, there is roughly 17% of upside. We would now be more than 20% off our low as well. The birth of a new bull market will happen if we're able to get back above 432, which also means that we're going to be less than 10% off our highs. 432 is where we now have that negative 10%. So if our upside potential is roughly 17, what's our downside risk? Well, if we stop out below 380.5, it's 3%. We stop out at last month's low, it's 8. So even if we use last month's low to print yet another monthly lower low, we're going to make twice as much as we're risking if we're right. So for me, again, one more time, the risk reward team or the team that wants to make money, it is up gang. If we think about the team that wants to be right, again, I like being right. I prefer to make money. The bears right now, the probability is still down. Why? People will only recognize we're in a bull market in hindsight, in the rear view mirror. But as the pattern is forming, before it's formed, we as technicians are able to get feedback to assess and then move forward. So in terms of this pattern here, this is the falling wedge that, yes, I know I've been very bull for a while in the videos because that's what I want people to remember. I hope that if you were on the bear team and you remembered that for the last roughly week, I changed the tune dramatically from being very bearish starting in roughly, I don't know, November, December last year to about the beginning of this month. I changed my tune. I tried flipping bullish once. That was right here on this pump right here, I think. I tried flipping bullish here or right here. Now we have early feedback that we are breaking the downtrend. We have to still hold it. But as I mentioned yesterday, where the bears got trapped is as we were forming yet another hammer, another bullish pattern. We still need volume, but this right me is giving me evidence that we are looking for the snapback and almost as high as 454. So I encourage you to look at the higher picture for the bigger story. Capitulation, literally the word that I wanted to hear. And the fact we are seeing fear and greed ticking a little bit higher means that, hey, if you've already capitulated, there's nothing left to sell. Capitulation literally means that I have to get 100% of the market. I can't afford to lose more. And we have the confirmation. We hear the bullish narrative from Bitcoin, we go right back up. So QQQ is what's driving us higher right now. But for these videos, I know people prefer when we focus on the S&P. One last thing to look at, then we'll look at some option chains. And again, I'm ignoring a lot of individual tickers just because, frankly, they all look good. NVIDIA stopped going down. It's looking really strong. For me, what'll be more important now that we have the tone of Netflix will be Tesla. We'll look at that one in a moment, but also the dollar. With the ECB and the BOJ giving their updates this weekend, I'm watching this 106.56 level like a hawk. Even as I'm away, I want to see where that weekly candle and the monthly candle will close out. We close out above 106.56. That means that net, the ECB and the BOJ, the DXY is likely looking for another leg up, potentially as high as 120. So that's the red line here. If we are lower, regardless of what the headlines are, just like the headlines regarding Netflix were, hey, we're kind of less bad than we were before, it went up. The reaction. So if we're going to be closing out a weekly below 106.5, it means that maybe potentially we have peak hawkishness, peak inflation, and also peak dollar. So that's what I'm paying close attention to here. Let's also look at Tesla just because I think we have to be aware of what it could do for tomorrow. Oh, it's green on the week by 2%. Well, Justin, that's bearish. It has to be. Now Tesla this, blah, 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 that. Elon Musk is stuck. So what I would say is right now there is a dominant head and shoulders pattern here. So what do we need to do? We have to break outside of the yellow box to confirm that we're not going sideways, which is almost perfectly our 50 weekly moving average at 873, sorry. So if we're able to get back above there, great. If we can just stop going down and just go sideways, also good. Why? I'm tired of talking about Tesla. The cars are cool. I'm tired of talking about Elon. I got fatigue. So I wish Elon all the best. I wish Tesla shareholders well. I just got fatigue. And I don't know if some of you guys do, but I'm tired of talking about it all the time. I'm so tired of it. So Tesla looks okay. If it was to move down 10%, it has to go down by roughly 15 to lose the relative low. So until it loses roughly 620, I would say it's still consolidating. Being above 700 or our low formed in February is good, constructive. Getting above 870 is bullish. And then we got the FOMC, Apple, Microsoft, Google, all the rest of those companies coming out next week. All right, so let's wrap this up. If this is a bullish chart, is there bullish options to confirm the move? Oh no, there's a bullish story here. Let's have a look. I saw it first thing in the morning. There was a 390, 395 call spread being built out. And there's open interest, there's volume, check. Also burned every single put by closing above 392. So all the puts are burnt. This is for the 20th or tomorrow. And then as we look forward to Friday, again, so 390 would be max pain, closing at 392 and holding the close even more strong because the option sellers were not even able to burn the calls, right? All of them got paid, every single one. 390, 392, which is again roughly our 50 DMA, and then also 395 is the puts call spread continuation, bullish, right? On the put side, they're still here. 390 to 385, or sorry, 388 is really where they're focusing, and then there's some down at 385 as well. But if we're getting continuation and the net effect is that we're up, I'm guessing there's going to be a lot of bear comments. The more there are, the more bullish I get because the more reluctant people are to believe the move is real just means that there is more potential. The average person is still capitulated. They're still fearful, which means there's still lots of money on the sides to come back in. Cash is at a record high going back to at least 2008. And then there's going to be all the short interest, which also has to come out. Again, all this fat red volume. That's how we get to 450. It's not because the market's healthy. It's not because we've gotten through the worst of it. It just means that stocks generally bottom on bad news, just like they top out on good news. And as I look forward to the August expiry, I'm noticing that there is some continuation here, 390. But for me, it looks like a spread. So it looks like, again, I'm just looking at the 16s. It looks like they're doing the same thing here, 385 and 390, because they want it higher, but they're also aware that there's just going to be a very powerful move, and they don't know which way it's going to be. Back down to 350 is roughly 40 points lower now. Back up to 450 is about 60 points. So they just think there's going to be a massive move one way or the other. The bull case is building. It is not built. We at least have to hold into Friday. So the last video that we will have out will be a Friday stream, and Mason is going to host that one to walk you guys through the last hour. But otherwise, if you've enjoyed the video, I would appreciate a thumbs up, drop me a comment, and the video from the weekend, which goes through my thesis in terms of why we would finally break out and then why this is bullish, should queue up right now. Otherwise, thank you for watching, and I look forward to seeing you next week. Thank you.